Hello and welcome to Pro Trader Strategies Market Commentary for Unenjoyment Friday, October the 6th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. I mentioned Unenjoyment Friday. That's what we used to call Unemployment Friday, which is the non-farm payroll number. It's one of the biggest numbers we get throughout the month. So let's get on with the economic data. Across the pond, we didn't really see a whole lot of information coming out. It's basically a lot of trade balance and currency reserves and stuff like that doesn't really necessarily move the overall markets here. So in the United States, we did get that unemployment number. Non-farm payroll employment change came in at a negative 33,000, expected to be increase of 82,000, so less than expected employment, basically due to the hurricanes we saw in Houston and in Florida. A lot of that pullback was due in part to waiters, waitresses, and food services, so like bartender and stuff like that. Drinks is what they tally that up as, drinks-related industries. Also, last month they did revise up slightly, which is a good thing. So employment increased more so than expected last month, despite the fact that we saw that non-farm payroll change pull back by 33,000. We did see unemployment rate decrease to 4.2%. So that's the one that everybody is going to be talking about, especially when they're talking their position and or economic politicized rhetoric, if you will. The real number is the non-farm payroll change came in at negative 33,000. So not really a great number there, although we did see our average hourly earnings come in at 0.5%, was expected to be 0.3%, and last month's number was revised from 0.1% to 0.2%. So strength in hourly earnings is a good thing. But some of that hourly earnings increase is due in part to increased the minimum wage. So when you see that increase in minimum wage, that could be part of the pullback also in those part-time jobs like waiters, waitresses, bartenders, things of that nature. All right, on to the overall market. We've got crude oil just slamming down, $1.44 right now, back below that $50 a barrel area. Just opened up today and slammed down, came right back down to the point of control, touched the Fibonacci level and the 50-day moving average. All of those things lining up, just acted as a magnet today, and the market slammed to those levels. On to gold futures. We're getting a little bit of a bump up in gold futures. I've talked about this. The overall economy is looking pretty good, but we're seeing the equities across the board down, so that's giving upward pressure to gold. Anytime you start seeing that, you're going to see a flight to bonds and gold, things of that nature. Bonds are down on the day, but they got slammed earlier today. We had, or actually right now and earlier today, we have Fed governor speaking, and Dudley was speaking earlier on. Kaplan's probably just starting his talk right around now, or is in that talk. But Dudley earlier on today was actually sounding a little bit hawkish on inflation, and the overall bond market got slammed on that. But then when pressed on when he saw interest rates increasing, he did not really answer that, which basically led the overall market to believe that the interest rates are not going to increase in the real foreseeable future, which basically means 2017. So don't really see any interest rates increasing before the beginning of next year. So I think we could probably see that increase in like maybe January, February, somewhere in there, but I don't think we're going to see any kind of increase anytime real soon. VIX is popping today back above that into the double digits. It's got the 10 handle. The reason why it's moving up is basically we're seeing a bit of a kink in the overall equity armor. As you can see here, yesterday we had a massive rally. Today we're starting to see a little bit of a pullback. Could be mostly profit taking. Not really any bad economic data other than that non-farm employment change. And that was due to, I think it's going to get sloughed off as due to the hurricanes and not hiring in and around those areas. We've got the Nasdaq slightly down on the day, but it's just down a few points. Did create another new all-time high today, but as you can see, that candle is not looking very good. It's kind of looking a little bit toppy there. We'll have to wait till Monday to see if that gets confirmed. We've got the E-mini S&Ps down about 4.5 points right now. Didn't create an all-time high today, but that all-time high was printed in the day session yesterday, late in the day. As you can see here, the 25, 50, 75 was printed in the day session, and it just to me looks like it's a bit of profit taking. Not a whole lot going on overnight. Into today, we did get that economic data. The market did slam, but I think it's kind of starting to really shove that off to the wayside as a blip in the numbers. But it is the first time we've seen those non-farm payrolls, non-farm employment change come in at a negative number in the last 7 years. So that is something to note anyway. On to the things that I've done. I tweeted this out yesterday. Costco did not work out very well, obviously, as you can see with this market down on the day. And in Costco, I went in there and sold the October 160 puts. I sold them for 49 cents. Thought I got a nice credit for it. Was well outside the market maker move. Market maker move was about $4 or $5. So I was outside of that and down $10 on the day, despite the fact that it did see better than expected earnings results. And they even talked about going in and competing with Amazon and not really seeing that as totally correlated. That could have been part of what caused Costco to really slam down yesterday. After the number came out, this was trading only around 165-ish area, so that was fine by me. I thought it was going to be past that, so it was good. This morning it opened up, started slamming down, held on to it a little bit longer. Could have gotten out for around $1.10, I think. At one point was when I started chasing it. Ended up getting out at $1.88, so that was a losing trade, obviously. Thought about rolling that out in time. By the looks of it, it's a good thing I didn't. Sometimes I will roll those out, collect more credit, and try and stick with that trade, but it just the way the market overreacted to what I thought looked to be good news, I decided to pull the ripcord on it. Then on to the trade that I just covered. Talking about this, it looked like it was topping out. We got a confirmation to the downside, put this trade on when we got that confirmation, and I had sold in there the October, and by the way, the Costco trade was in the weeklies that expire today, so I did need to make some kind of move in those. But these for applied material, AMAT, I sold the October 53 calls in there on that confirmation. But with today's reaction and yesterday's bit of a move up, we've got these dojis that just looks like it's fighting all the way down tooth and nail. Today to the upside, decided to get out of that while the getting was good and got out for a scratch. So in those October 53 calls, I originally sold them for 67 cents. I bought them back for 67 cents. So a scratch aside from the commissions on that one, but just didn't like the way that the market was reacting with that today. So, it could easily start trading up next week. So I decided to pull the plug on that. Today we're going to be doing a webinar on the butterfly, but we're going to do it as a broken wing butterfly. So what we're going to do is we're going to adjust the wings on this in order to completely eliminate our risk in the direction to the upside. So this is going to be a good butterfly. If you're worried about the market moving higher, but you really are pretty sure it's going to stick, right around here, we might even use AMAT as the example in that to create a broken wing butterfly, because it still has high implied volatility in there, and that we can try and take advantage of. So go to ProTraderStrategies.com, sign up for that, and if you can't take that, take it easy.